Hi, everybody. Welcome to the GrowCast show. We are on episode 84, and I'm your host, Lisa White. Today, we have Johnny Chan, who has been in the financial services industry for 15 years. He's currently a financial services director at Finexis. Welcome to the show, Johnny.
Hello. Yeah, nice to be here.
We're happy to have you here. All right, we'll start with some questions.
Sure.
Why did you decide to join the financial services industry?
Okay, I guess that's the origin story, right?
Yes.
So it's pretty long, but I try to summarize it in 10 sentences. Okay. So I came from a very poor family who stay in a 3-room and almost zero financial knowledge. You know, that's what my parents are, right? And when I was in school, I was like super introvert, geeky, and small social friends. Then after I graduated, I attended Adam Khoo's seminar about being a self-employed, about breaking through that cycle, right? So I realized actually if I want to break cycle, I have to be doing my own business or be extremely lucky. I went into construction business, venturing overseas, doing B2B and also offshore management. Chain of it, my best friend at age 30 had cancer, and I actually took care of him during the last period. Then I realized actually I do not know much about financial planning and especially insurance contract, about the claims, about the details. So I joined the financial service industry. So largely also because I can buy my own policy and earn from my own commission, right? Because they're saying that making good payout from there, right? So I did well. I doubled my income, making good 6-digit, and finally see that the skill sets that I have as being analytical actually help many professionals find the right products and services. So yeah, why not making a good money and feel good? Yeah.
That's a very inspiring story.
Yeah.
Thank you for sharing.
Yeah.
How is your financial advisory practice different from the others?
I guess every advisor, we want to say that they are very different from one another. But actually, in general, there's actually just 2 types of financial services that I've seen, right? So even though I see people coming out of ebooks, coming out with flashy names to their so-called financial system, but there's just generally 2. So one is actually very product related, and then the other type will be very technical and advisory. So being an FA who carries many products, I actually try to understand my customer needs first. Then I actually seek the best-in-class products to fit into their bespoke plans. Periodically, I'll do a review with them to ensure that they're actually ready to face life challenges with the financial plan, and longevity is actually the key lah.
What are the challenges that you faced when you were starting out?
Well, I guess I got the biggest challenge when I start out because this is a sales role, right? So basically, being an introvert, I actually get scared to talk to people or even voice my thoughts. Even like doing this podcast, I'm like, okay, that's not like me, right? But actually with many training and practices in the industry, right, I slowly overcome it and gain my confidence. Then came my next challenge, where to find the clients, because come from poor family, network of friends are very small, right? So I would join the employed platform, right? In the financial institution, I serve working clients, right? And so from there, I actually assist my clients with their existing policy. So I start off not like selling fresh policy, right? I start off with reviewing the existing policy and claims and help them claims or even maturity. Then from there, I build very good relationship with my clients, and then it overcomes that also. Yeah. Yeah.
How would you define your ideal type of client?
My ideal clients is someone who value clear communication, right? Have mutual respect and believe in this called collaboration, right? So they have a clear vision of their goals, right? But are open to creative inputs and professional guidance, because I enjoy working with clients who are proactive, responsive, trust the process, because those that see the advisor-client relationship as a partnership where we work together to achieve the best results, right? Ultimately, ideal client is someone who committed to growth and success, who appreciate the value what I bring to the table. Yeah.
What is holistic planning versus buying another policy?
Perfect. Great question, right? And there's a meaningful distinction to understand, right? So here's a very clear professional way to explain it between holistic and simply buying another policy. Holistic planning is a comprehensive, big picture approach to financial security, right? It involves understanding a client's entire life situation, goals, family, career, health, debts and assets, and risks and dreams, right? And building a customized plan that covers all area of their financial well-being. So it's about creating creating a long-term strategy that aligns with the life stages and adapt as circumstances change. In contrast, buying another policy is more transactional and more often reactive. Like life situation happens, then they just look at it, right? It typically focuses on solving one immediate concern, like getting a new coverage or adding a new product without necessarily evaluating whether it fits to their overall direction, right? So I summarize in short, right? Holistic planning is like building a solid house with a blueprint, while buying another policy is like adding a window without checking if it's the design. Yeah.
That's interesting. It sounds like a very tailored approach to each of your clients and their needs.
Yes.
So what can somebody expect when they're meeting you for the first time?
Actually, there's nothing to expect. At this stage, right, there's actually exploration of ideas and concepts and their concern. As usual, there'll be introduction of myself, my company, my product and services that I do, right? This actually sounds like going for a work interview, right? But actually, that's true, right? Because my clients, which I represent, is my boss. So they must be happy with my CV, my experiences before engaging me as their wealth and legacy specialist. Yeah.
So basically, it's like an understanding meeting first before anything begins.
Yep.
What if someone has had a bad experience in the past with insurance agents? How do you advise them about it?
Actually, I completely understand how a past experience can leave a sour taste, right? Especially in something as personal and important as insurance. Unfortunately, not every agents take the time to truly understand what the clients or the people need. Okay, my approach is a little bit different. I believe in building relationship, not just in making sales, right? I focus on listening, educating, and working with clients at their pace to create a plan that makes sense for them, right? Not just a product on the shelf. If you're open to it, yeah, of course, I would like to show to what that a respectful and transparent experience can feel like. Yeah.
Do we really need life insurance?
Okay, love that you're asking this question, right? This is one of those questions that deserve a real honest answer. It just depends on the situation. But for most people, right, life insurance is not just about death. It's about life, right? It's about protecting the people that you love and the lifestyle that you built, right? If you have dependents, a mortgage, a debt, or even future plans like your kids' education, right? Life insurance helps makes those goals don't fall apart if something happens to you, right? It's just not just about emergency. It's a key part of a smart, responsible financial plan.
Should we plan for both insurance and investment at the same time or separately?
Okay, great question, all right? And the answer really hit the heart of solid financial planning, right? Insurance and investments are like two sides of the same coin, right? They serve different purposes, but they work best together, right? Insurance protect what you already have, ensure that unexpected events don't derail your future. Investment, on the other hand, right, help you grow your wealth and reach your long-term goals. Right? So if you actually focus on insurance with investment without protection, you're building wealth without safety net, right? And if you only focus on insurance, you might miss out on opportunity to grow financially. That's why it's wise to actually plan for both at the same time as part of a holistic strategy. Yep.
So at what age do you think people should start their investment savings?
I would say as soon as they know their life goals, like when they want to retire, when they want to have passive income, when they want to be rich, right? Or when they want to retire, right? Yeah. So basically, if you have an end goal in mind, it's the time to start, right?
Okay.
Yeah. But if you're like lost, you probably won't even know where to start because you don't have a goal.
Should we only have one savings pot or should we have several?
It's something a lot of people don't think about until their finances get a little bit more complex as we grow, right? So there's more and more things, right? So it's actually smarter to have multiple saving pots rather than just one. Think of it as each pot is a label for specific goal. So like one for emergency funds, one for traveling, and one for a house deposit, and one for kids' education, or one for your dream car, right? So when you separate your saving this way, it's easier for you to organize your savings, right? Stay motivated and avoid accidental dipping into money meant for something else important, right? It brings clarity, discipline, and also help you track your progress towards different life goals more effectively, right? I learned a formula from my accounting lecturer last time in school, right? And this, I think, is super easy and practical, right? If let's say you earn $10, right? You save $2, right? First, right? Then you actually spend $5 on your daily expenses, and then $1 to $2 on insurance or investment, and then $1 on emergency funds. Actually, if you don't spend the emergency funds, never touch your insurance or investment, right, you're practically saving 50% of your money. I'm quite sure you can actually retire before 55. Yeah, with this, not the 65, right? Yeah, you can probably retire before that. Yeah.
Yeah. Well, I usually spend my money first before I save anything.
Okay, you should try reversing it.
Yes, I should.
Try. Yeah.
All right. What is dollar cost averaging?
Okay, great one. Okay, this is a very powerful concept, right? Especially for new investors, right? Here's a simplified way, all right? DCA, dollar cost averaging, is a strategy where you invest a fixed amount of money at regular intervals, like monthly or yearly, right? Regardless of whether the market is up and down, right? Instead of trying to time the market, you spread out your investment over time, right? This way, you actually buy units, more units when prices are low and fewer when prices are high, right? Which can actually lower your average cost per unit in the long run, right? It's a smart, steady approach that reduces the impact of market volatility, help take out the emotions of investment, right? Because if it's volatile, right, your heart will be like up and down. Yeah.
So basically what you're saying is like spreading it out versus like one whole lump sum at a specific time.
Correct.
Interesting. Okay. Useful advice.
Yes.
So why Finexis?
Okay, this is my personal belief, right? So it's not just a company, it's actually a platform for growth, purposes, and real impact. At Finexis, you are not just selling products, right? You're building meaningful long-term relationship through holistic financial planning. You get the tools and support to grow personally and professionally while staying true to your own values and strength. We offer open platforms. You're not tied to one providers. You can buy truly tailored products, not one size fit all kind of thing, right? There's also strong mentorship and culture. You're surrounded by driven people, people who support one another, not competing, right? And also the leadership here actually truly invests in success. That's why there's like a lot of tech advancement, right? For personal growth, right? This is probably the platform where you actually have a lot of personal soft skills training, right? You grow professionally as a person, right? And of course, I think purpose driven, right? I think it's not just about making money, it's about helping people plan confidently, live confidently, and retire with dignity, right? At the end of the day, Finexis, I believe, give you the freedom to build your business your way with integrity. And I also very proud to say that we have an overseas Finexis Hong Kong partnership and asset management team company set up that make us very different from other companies. Yeah.
Why should we focus on the long-term behavior of the market?
Solid question. Okay. And one that really gets to the heart of smart investment, right? Because the market moves in cycles. Last time in Cons we learned there's 10-year cycles, right? So short terms up and down are normal, but in the long term is historically upward trend, right? If we only focus on short term, right, we risk making emotional decisions, right? Like selling during a dip, right? Or panicking, like when things happen, right? And which actually hurt your financial growth. Now, focusing on the long-term behavior of the market helps you stay calm, consistent, committed to a financial goal. It also gives us time to let this thing called compounding work its magic, okay? And smooth out the bumps along the way. In other words, patience and perspective are what turn investment, right, into wealth building.
How does being disciplined help you when you're investing?
Okay, love this one, right? It hits right in the mindset needed for successful investment, right? Discipline is actually a secret source of investment, right? It means sticking on to your plan, whether the market is up, down, or sideways. Being disciplined helps you avoid emotional decisions like panic selling, right? Or chasing hypes during a surge, right? When you're consistent with your contribution, trust the process and stay focused on your long-term goals, you're giving yourself time and compounding a chance to do the job. Discipline keeps you grounded when things feels uncertain. And in investing, right, that consistency is actually what separates success from regrets. Yeah.
What is IUL?
Great question. It's a new hype product, right? And IUL actually stands for Index Universal Life Insurance. Now, let me break it down, right? So it's a clear, concise explanation. An Index Universal Life is an insurance policy that covers permanent death with cash value components, right? The cash value is actually tied to the performance of stock market index like S&P, all right? S&P 500, but it does not directly invest in the market. Instead, the value grow based on the index performance, usually with a cap, right? With a maximum returns and a floor. So 0 to protect your downward risk. So basically, you don't have any downward issue, right? The main benefit of an IUL is flexibility, right? You can actually adjust your premium. There's also potential for growth because the money actually grows more than a traditional whole life product, but with less risk since it's actually protected from market losses. Now, there's also tax advantage. The cash value grows tax deferred. You can take the tax-free loan or withdrawal against it, right? So I summarize, IUL actually offer flexibility, potential for higher returns than whole life, protections from market downturn, but it comes with a cap on returns and slightly more complex, right? They might be interesting options for someone who's looking for life insurance with investment component who also want the protection from the market volatility.
Why is income tax planning important in Singapore?
Okay, I think income tax planning is crucial for individuals and businesses in Singapore for several reasons, right? So let me say why it's important, right? I think we need to maximize our tax saving, right? Individuals and businesses actually have tax liability by taking on full advantage of available deductions, exemptions, and tax credit, right? In Singapore, Singapore governments actually offer various incentives like tax relief for parents, tax exemption for startup, deduction for donations, among others, right? So when you do tax planning, ensure that you make the most of opportunity, right? Second thing is also we need to comply with regulations. Singapore has a well-structured system with clear rules. Now, navigating through this could be tricky without proper planning, right? So income tax planning ensures that you adhere to all the tax law and filing requirement, reducing the risk of error that leads to penalty, and then IRAS will come looking for you, right? Then it also help you maximize your financial goal. With tax planning, right, businesses and individuals can align their tax strategy with financial objective. So you actually free up more capital. You can do business more, right, with that. You also take advantage of tax incentive and exemptions. So some tax relief, right, is like you buy insurance, you also have that. And then for parenthood and also donating, right? So you make sure that you just align with that, right? Then, of course, when you do that, you also help plan for your own retirement. So for Singaporeans, individuals, income tax planning help reduce your taxable income, making retirement savings like CPF, right, more efficient, right? Because your CPF also is tax relief itself, right? Then, of course, you also optimize business structure, right? For businesses, tax planning is essential for choosing the right structure. So proprietor, partnership, and even private limited have different tax rate, right? And they are long-term objective for the business. So some structured offer better tax rate, while others offer more tax deductions, exemptions like expenses, right? So, and then good thing also Singapore capital gain, right? So capital gains and dividends are non-taxable in Singapore. So basically, if you know how to shift assets and do proper planning, the money that you earn from buying those products is also don't need to pay tax.
How does the sandwich generation balance children's education and retirement funding?
Such a great question, right? I think it's a very tough balancing act that many people face, right? The sandwich generation, which is the balancing of the financial need of both your children and aging parents, right? Faces the challenge of prioritizing children's education while also securing their own retirement, right? The key is to recognize that while both are important, retirement saving could come first, right? Here's why, right? You can always take loans or find ways to fund your children's education, right? The earlier you start saving for retirement, the more time your money has to grow, right? And that gives financial freedoms down the road. That's it, right? Planning for education, whether through college saving plans or other investments vehicle, is also essential, right? Ideally, you want to set up system for both so that as your children get older, you're not scrambling for retirement savings, right? A good strategy is actually to split your resources, maybe prioritizing retirement planning first and then allocating additional funds towards education saving, right? By planning early and seeking the right financial advice, you can strike a balance and set up both you and your children for long-term success.
Do you think planning for your retirement is important?
Yeah, absolutely, right? Planning for retirement is not just important, it's actually essential, right? Especially in Singapore, right? Retirement planning is about making sure you decide how you want to live later in life, not circumstances, right? Because you have a choice, right? It's not just about saving money, it's about securing your financial independence, peace of mind, freedom to enjoy your golden years without being a financial burden to others, right? The earlier you start, the more powerful tools like compounding, investments, and CPF planning becomes, right? And the truth is, with rising cost of living and medical care costs, right, relying on CPF loan may not be enough to maintain the lifestyle you seek, right? So whether your dreams is to travel, spend time with your family, or simply relax without financial stress, planning for retirement give you control over that in the long-term future. It's also a long-term gift for yourself and your loved one.
So according to your expert advice, at what age do you think people should start thinking about retirement?
Most of my clients actually started planning about 40, right? But the current group of people, they want to retire the day they started work, right? So basically,
it's true.
I've seen people, because they inherited a sum of money from their parents, right? They start planning as early as maybe 25.
Interesting.
Yeah.
Okay. What is one taboo topic that we don't really speak about in Singapore?
One taboo topic in Singapore, whether it comes to financial or insurance planning, is how little our parents are actually prepared for financial planning, right? It's a taboo topic because talking to parents sometimes there's a gap, right? And the expectation is that we as kids have to fill the gap, right? So it's super common in Singapore for families to avoid deep conversation about money, right? Because always arguments, right? Especially in between generation, right? Many adult children don't know how much actually their parents have, right? Whether they have adequate insurance coverage like critical illnesses or long-term care, right? Because they're the adults. And if CPF is enough to sustain them also, and also what debts they have, they're still carrying. And then the unspoken assumption is often, my kids will take care of me, right? So the assumption can actually clash harder in today's age with rising costs, inflation, caregiving responsibility, and young adults trying to build their own dreams in life. Now, because nobody wants to seem unfamiliar, right? It's hard to bring up the idea of setting boundary or asking for transparency, right? But avoiding the topic can also lead to big shock when medical emergency happens or retirement turned out to be severely underfunded, right? Does it really hit homes, or have you seen this kind of silence play out in your life or people around you? Yeah.
Wow, I think that's a very interesting topic. I actually never really thought about that before, but now that you say it actually is like an unspoken thing. And I think people my age especially, they definitely feel the pressure for that because things are getting very expensive, as all the points that you mentioned, but also like being stressed about taking care of ourselves and our parents on top of that with how expensive everything is.
Yes.
Yeah. So what are the necessary insurances for every Singaporean?
Everybody needs differ depending on their age, lifestyle, and financial goals, right? So these are the essentials of insurance that I think Singaporeans should consider so that they have absolute basic. Let's not talk about the depth of coverage. Let's talk about the width of coverage, right? Now, first thing, you need a health insurance. So it's either hospitalization plan or integrated shield plans, right? Medical costs in Singapore is expensive, especially in private hospital, right? So while Singaporeans are covered under MediShield Life, it only cover basic treatments in government public hospital. So I would recommend upgrading it to integrated with plan for better coverage or to at least a ward or maybe private so that you have choice. Now, the second one I think that is important will be critical illnesses. So I'm quite sure that among our peers or even our parents, right, critical illnesses like cancer, heart attack, stroke can actually cause a long-term income loss and high treatment costs. So basically, by having a critical illnesses, you have a lump sum at the diagnosis of those such conditions. It will help you pay for living expenses, alternate treatment, and so you can recover without financial stress. Right. Third will be life insurance. Why it's important? Because it actually gives financial protection for your loved one if you pass away or permanently disabled, especially if you are a parent or a breadwinner or, you have parents to take care, right? So things that you need to consider is maybe term plans and whole life, or IU, just like I mentioned, endowments, or other products, right? Then, of course, I think the next one that's important will be personal accident, right? Because accident do happen anytime, right? So it covers medical costs in the event, right? So it's good for people who sometimes do manual work, ride motorbikes, do high risk sports, right? Okay. Then next, home insurance that covers your house, all the replacements due to fire, theft, flood, right? That's essential. Just something to note, HDB fire insurance is mandatory, but it only covers structure, not the contents, right? And then I think disability income. Why? Because it's when you become too ill or injured to work, this type of insurance give you a monthly payout. So it's like a salary, right? So consider you can actually rely on it with little backup, right? So yeah, so a good example would be a Cashew Life, right? Okay.
Thank you. That was very informative. Yeah. Will you leave the financial advisory industry anytime soon because the turnover is so high?
So I'm 15 years and going right now, right? So actually what I've seen is that there's about the same turnover, right? So while there's people going out, there's also people who join, right? So to me, there's no change. But however, I see there's a trend of people with higher education. So I see masters, I see doctors coming to the industry, right? The other trend that I see that is special is that overseas people, like I've seen like people from China, Malaysia, Thailand coming to serve their niche of clients who are expats who are in Singapore. Yeah, so this is a trend that I see.
Okay.
Yeah.
With Singapore being a global business location and having many expats, what are their insurance and planning needs in Singapore?
Okay, great question. All right, so I think expat in Singaporeans have a unique set of financial and insurance planning need, quite different from local actually, right? So whether they're here for a short time or settling for long haul, right? Planning well means a difference between thriving and being caught off guard, right? Here's a breakdown of what's really important for expats in terms of financial planning. They definitely need health insurance, but what's so different is that basically because expats don't get access to heavily subsidized public healthcare, right? That Singaporeans have, right? And then of course they would need a good international or local private health plan that cover hospitalization, outpatient care, and possibly repatriations or treatment overseas, right? Especially if they prefer to have the procedures back in their home, right? So sometimes it's also very important for them to check their employer benefits are sufficient, right? But most of the time it's basic, right? Right. Second thing I think that they also need is critical illnesses. Okay, many aspects have dependence on financial obligation, right? So a portable coverage means that they can be continued if they ever shift elsewhere because due to company, right? So critical illnesses are important, right? Now, some local plan unportable, right? So this is the part where when they buy, they may not know, right? Yeah. So then retirement planning, expats in Singapore don't contribute to CPF, right? Which is our key retirement tools, right? So they need a personal and strategy for investment savings. So international investment plans or private pensions plans that are tax efficient with consideration for their long-term base is important. So you have to worry about currency risks and also future tax implication in their home country, right? Investment strategy is also very important. I think that expat may earn more, but the cost of living and instability may erode wealth. So imagine your rental going crazy, right? So clear assets allocations across geography, access to global market and potential tax efficient structure like offshore accounts is important, right? Then I think also very important will be estate and tax planning, right? Cross-border tax and inheritance law can really get very messy, right? So basically they might have a will in their own country, but I think a will that covers Singapore and the whole country is very, very important. And understanding the capital gains, death estates tax is important. So some countries like the US, UK have tax their citizens globally, even though they're not contributing income there. Yeah. Then of course I think education, planning for their kids, because cost of international school is expensive. Yeah.
Why does it make sense to do insurance and financial reviews, and how periodically should it be done?
A great one, all right? So basically doing a regular insurance and financial review is like giving your financial life health check, right? It helps keep your plans still fits your life, which can change faster than we think, right? Especially in a fast-paced place like Singapore. So why it makes sense and why? Firstly, there's life changes. Yeah. So basically, as your life changes, different life stages, right? Like changing job, getting promoted, getting married, having kids, buying a home, lose a loved one, moving overseas. What worked 2 years ago may not be sufficient right now, right? Okay, then there's also coverage gap. I've seen many clients, right, buying same policies like hospitalization, right? So it actually overlaps. Yeah. So basically, when you do a review, it helps you avoid overpaying, also find your blind spot and optimize your protection. Now, you also keep up with market and policy changes because our CPF do change, inflation numbers do change. So basically, you might need to rebalance your investment. You might also want to make sure that your insurance coverage is not outdated, and there could be new policies that really offer more bang for your buck, right? Now, then of course, I think set and track goals. So when you meet the advisors, we always like to set goals for them for the next milestone, right? So whether are they on track to retire by 60? Maybe you want to retire at 55 because suddenly there's a lump sum or a huge promotion, right? Whether you want to buy that condo, your kids doing that. Now, when you don't do review, you're just hoping for the best, right? And then for the questions, how often should we do it? I think it should be once a year, right? So it's a sweet spot for most people to keep track, okay? Then also what I said just now, all the different life stages. But also a very important point, right? You can meet our financial advisors to talk about tax planning, right? Because with SRS, with many things, there's tools that actually help you reduce your income tax. So a yearly review will be good. Yeah.
Why should one be a financial planner rather than a bank relationship manager?
Very juicy questions. Okay, both roles seem similar on the surface, but being a financial planner and a bank relationship manager is like really choosing between a trusted advisor versus a sales-focused rep, right? With very different long-term vibes and career outcome. Now, I give a breakdown, right? So typically in the bank RM, it mainly focus on bank products. So loans, savings, investments, structured deposit, right? Conversation revolve around what's between the bank ecosystem. Now, with a financial planning, it's a holistic and client-centered. Okay, so you look at investments, you look at insurance, you look at retirement, you look at estate, tax optimization across different providers, not just one brand. So it's actually long story short, full suite of life goals, life products versus bank products. That's all, right? And then, of course, I also feel that what's very different is the client relationship, whether it's transactional or long-term, right? Often product focus and you got to manage hundreds of clients. So with little time to go deep. So, and then second thing, I think in a bank, turnover is high, right? So clients may not stick with the same RM. Maybe the RM might be shifted to another branch.
Yeah.
Right. Whereas financial planning, you're actually building a long-term relationship. Trust and continuity matter more than the short-term sales because we want to see our advisors so that we can actually propose more products, right? So you may serve fewer clients, but each one go deeper, right? And I think due to this, financial planners actually get more referrals and repeated clients, not just because it's because of trust, not products, right? And I also feel that in terms of income-wise, right, income product, I mean, I'm selling my career, right? Bank RMs typically is base salary plus bonuses, but usually income is kept tied to KPI. I mean, I used to come from there, right? So you're subjected to internal team changes, rotation, and bank structuring. Whereas for financial advisors, yes, we are commission or fee-based. So often early years are tough, but long-term potential rise, right? With a good solid clients, we really do very well. And then many planners have setting our own businesses, setting our own FA, become a team lead, or even having their own firms. And I think freedom and personal branding is also something that's important. As a financial advisor or financial planner, you build your own personal brand. You have your own preferred clients. Like for me, I choose like maybe it's a professional that I like to serve bankers actually and expats. And then also you can create your own content, workshop. Whereas a bank, you have to follow that template thing, right? Yeah.
Right. Okay. Why do you want to build a team of financial advisors?
Okay, so I think being a team allows you to multiply your impact. So for me, right, so I can actually help more people than I could do myself, right? If I can create the content, everything, or the ideology behind it, I can train my guys. My guys can help me do that also. So it's about empowering clients, empowering advisors, and creating a business that strives on collaboration, trust, and education, right? So if people are interested in joining the financial advisory or want to build a team to have their own culture, I would love to talk to you guys about your goals. Yeah.
What is the difference between an insurance agent, tied financial advisor, and Finexis?
It's a great question, actually. There are several key differences between an insurance agent, a tied financial advisors, and a financial advisory firm like Finexis, right? As each one have different distinct growth structures and approach when it comes to offering financial products and services. So let me break down, right? So insurance agent, a typical insurance agent sells insurance products such as life insurance, health insurance, and general insurance on behalf of one company only, okay, one product manufacturer. So they're actually either being contracted and employed by one, right? So Focus will be selling from their product, okay, limited offering of solutions within the company. They don't offer other services like which is important for financial services like investment products, purely investment or estate planning, right? And usually they are more sales driven, so compensated on products on commission tied to the insurance policy they sell. The relationship between the client relationship between one insurance company, well, not the advisor, right? Because it's only that company, right? So even though the agents facilitate the sales, right? Also, I think deep knowledge, they probably have deep knowledge of that one provider, right? Can also specialize in specific products, right? But they are less flexible in offering tailoring solutions for clients' broader purposes. Now, next type financial advisors. Type financial advisors work for a specific financial institution, could be a bank, could be an insurance company, type selling that products. They can only provide a broader range of products and services, but still limited to the institution that they represent. So same as the thing, they only have slightly more, but they're still tied to one brand. Then relationship with the institution, the advisor work directly with the client, but the institution plays significant role in the process of the products offering. I think that they can only recommend what the company or the institutions bring on board, right? And may not be the best options available. Less flexibility when it comes to independent advisors in offering diversified. Now, I talk about myself, so a bit of Koyo, right? Okay, Finexis is more of an independent owned financial advisory firm, okay, meaning that our financial advisors are not tied to one product provider, right? Or even the banks or everything, right? Instead, we have the freedom to recommend products or a range of providers from different places, different banks, different insurance company, even different will or lawyer, right? Our advice are usually independent, okay? We offer unbiased advice and able to recommend best product for the needs. So we have a comparison chart for my clients most of the time. We also offer comprehensive services. Besides insurance or financial planning, we also do pure investments. We also do bank loans, mortgage loans, and also tax planning. We can be fee-based also. We can be commission. We can actually earn through the time that we serve to our clients. So sometimes meeting our clients, not buying products. So they just buy me a coffee. I'm happy enough, right? So we are not tied to one. Yeah.
We hear that you conduct free webinars and seminars on educating Singaporeans on CPF changes and updates, LPA, wills, and trusts. Can you explain what it covers?
Okay, that's right. So I host free webinars or seminars on important financial or legal topics such as CPF, right? CPF, LPA, lasting power alternative, will, and trust, right? Because it's a fantastic way to actually empower Singaporeans with the knowledge they need to make, to have an informed decision about their financials and legal future. So let me break down, usually what this covers, right? So CPF changes. So CPF is very important in Singaporeans' retirement planning. There's frequent updates, there's frequent change that people need to be aware. So basically, when we host a seminar, we cover all these things like contribution rates, employee, then also CPF life plan, right? A breakdown of how CPF life annuity actually works, MediSave and MediShield updates, because it always changed for the last few years, and then also CPF withdrawal rules. Okay, so clarifying how CPF withdrawal works when you reach 55, 62, or 65, right? And then, of course, we also keep people updated about government schemes and grant, right? And I think the objective is to help people stay on top of the changes of their CPF life, CPF, right? Now, second thing about LPA, right? LPA is actually a very legal document that actually let you appoint someone who is called a donee to make decisions on your behalf if you're unable to do some things in the future due to mental incapacity, like for example, stroke, right? So it's a very, very important document in ensuring that your wishes are respected, right? So the LPA is a legal framework, right? So it actually covers a few things like decisions on personal welfare, right? Who to manage, who to take care when you're unable to do. And basically, in our seminars, we also set up how to actually do it step by step, right? And then who you can appoint, okay? And then why is it critical? So basically, we come up with a lot of scenarios where people will be able to understand or they may not have seen in their life blind spots, right? Then, of course, we talk about will. will is actually a very important legal documents that outline the personal assets, how to be distributed after death, right? So basically in our topics, we'll be covering like introduction of will, interstate and versus estate, explaining what happened if you die without a will or with a will, right? And also components in a will, what are the things that you need to list down, and how to write a valid will, right? And common mistakes to avoid, discussing common pitfall, and actually the objective is to help people understand why having a will is important or essential in their legacy to avoid complication in the distribution, right? Of course, I think last one is trust. It's going to be a big topic. Let's mention it again. Yeah.
Okay.
Yeah.
Who are your free seminars and webinars suitable for?
The free seminars and webinars are suitable for a wide range of individual, right? At different stage of life. I've seen people at the 20s coming, 30s coming, 40, 50 coming, right? Now, why is it suitable for 20s? Because at the early stage, right, they may not be understanding their financial planning concepts. They may not understanding their CPF, right? How their CPF contribution helps their retirement, and of course, whether having a will, right? So basically, this group is actually at the stage of starting accumulating assets. So knowing all this will help them plan for the future, right? Then probably for the next group will be the parents, which is probably about 30 to 40. Parents usually have children to care in, so when they're setting a will or their assets pass according to their wishes lah. So this group might also have questions about protecting their kids' financial planning, financial future, their educations. They're also more concerned about their own personal healthcare needs, managing family wealth, so LPA and such topics is important. Then of course they plan through their future, what happens if things happen, whether they need to set up a trust. Then I think the 40 to 50, this group of people are probably in the mid-career, so often have some assets, quite substantial assets, and also going towards retirement. So they are thinking about retirement. So they need to understand the updates to CPF because it's closer to there, whether there's a shift in goalpost or shift in timeline, right? That's important. They also be in the stage of planning for their healthcare because at this age, probably there's a lot of chronic illnesses, right? And then also caring for their aging parents. So understanding CPF updates, trust, all these are very important. Then I think for the last group will probably be retiree or near retiree. These people approach retirement, they focus on shifting on preserving their wealth, estate planning, so they're basically ensuring a smooth transition of their assets to their kids, right? So they have questions about CPF, and these are the questions that we always address during there, right? Then understanding their trust, also the takeaway about it, understanding how to maximize CPF life, okay, or other retirement scheme. Okay, I miss out this group. This is probably a business owners, right? Entrepreneurs have often more complex financial because they have their own accountings and everything, right? Now, so their estate planning is a little bit different from employee. They need to think about how their business interests are handled after their death or in the event of incapacity. Like, who take over the business, whether kids take over, if the kids are not trained or too young, can they take over? So these are key concerns. Yeah.
What are some misconceptions that clients have of financial advisors?
Several common misconceptions, right, that often clients have about financial advisors, especially in Singapore, right? These conceptions sometimes really hinder clients from seeking out professional advice or truly benefiting from the services that financial advisors provide. So let me break down some of the very relevant myths, right? So one question is one of the myths is financial advisors are just selling products, right? Some people think that meeting a financial advisor is like meeting salespeople, pushing insurance products, planning, and then earn commission, right? But while we earn from selling, right, a good financial advisor work to understand your goals, needs, aspirations, and then tailor recommendations that align with your personal financial plan, right? They focus on building long-term financial health, not just selling products. Okay, so also many financial advisors will often adjust plans to suit the needs. So it's not just about selling. Sometimes we ask clients to maybe stop this policy because needs change, right? Now, second thing, financial advisors only work with the wealthy. They think that only the people got money then can plan, right? Some people think that financial advisors only serve high net worth individual or those with significant assets. Reality, we work with people from all income group, right? I personally work with people with all income group and help with a wide range of financial needs such as budgeting, right? Saving, retirement, debt planning. So financial planning is important regardless of wealth, and financial advisors help create a financial roadmap that works for their specific situation. Then I think another myth is financial advisors are expensive and only for the rich. Okay, so some people assume that hiring a financial advisor is costly and only worthy if you are very worthy. Actually, no. I mean, sometimes I meet clients, right? I don't even recommend products. I just meet them, help them do cost structuring or insurance product structuring or doing tax planning, right? I help them save dollars. So they are not even paying me extra money or they're not even giving extra. So we're doing that for clients. So we help avoid costly mistakes. Then 4 questions is financial advisors only recommend the insurance product. I mean, when I first joined financial industry, people think that I'm insurance agent. Don't call myself financial advisors because financial advisor covers wide spectrum, right? So while insurance is a very important aspect of financial planning, a financial advisor look at the holistic view of financial needs. So we actually recommend investments, retirement, estate planning, tax optimization, and more. So we also help build a diversified financial pot that's not just insurance, right? Yeah. Then financial advisors are all the same. Yeah. Okay. I don't know. We all maybe have the same look, right? Some people assume that all financial advisors offer the same advice or services, leading to the idea that one is as good as another. But there are many types of financial advisors because type advisors, technical advisors, and different style, right? So it's important to choose advisors whose value and approach specialization aligns with your needs and preferences. I think that's all. Yeah.
Thank you very much. This was a very informative session. I've learned so much through your answers today.
Yes.
So it was very good to have you on the show today.
Thank you.
This was episode 84 of the GrowCast Show with Johnny Chan.
Yay.
Thank you.